did about 20 million in gross fees at that point. But really my dreams as far back as I can remember was to be an entrepreneur. The big lesson I learned is I didn't know anything. My friend from Lehman Brothers at that time who was in business said to me, I always remember that because.
All right, Jay, such a pleasure to have you.
Thanks for having me.
Absolutely. So give me the story with drama and theater. What was it?
Yeah, we were chatting when you were saying about having a good voice and being able to be heard. In high school drama, when I was a freshman in high school, I made one of the plays, whatever it was, and I started speaking on the stage, and the director is a little bit of a thing. A woman, Mrs. Fern, never forget her, is yelling at me from the back, and she keeps interrupting me. And I kept, every time I started my line, she'd interrupt me. I'd say, Miss Fern, why are you interrupting me? She goes, I can't hear you. So I said, what do you want me to do, yell? She goes, no, I want you to project.
Amazing.
So I said, what is that? She goes, well, you get it from in deep, and you send it all the way across the seats. I said, okay, I'll do it.
All the way to
sounded
me.
like a drama thing.
Yeah.
So that's where I learned that. Yeah.
So we start with Miss Fern, and then, fast forward 35, 40 years, whatever it is.
A lot of years later, yeah.
I mean, you basically, and I'll have an intro sort of before the podcast that I'll do on my own, but you were at the top of the brokeraging, hierarchy pyramid in all of Florida, and then now you're a developer, investor. So I really want to get into all of that.
Sure.
But I want to start with sort of, how'd you fall into real estate? Was your family in real estate?
Yeah, my father was in the building materials business, the family. My grandfather had founded the company. I thought it was a business I was going to go into in Boston. And then, my father got an offer he couldn't refuse for the business.
Grandfather offer.
Yeah, and he said, listen, I'm going to sell the business, but I'll back you, whatever you do one day, with a couple of dollars, and we'll get you going. So really my dreams as far back as I can remember was to be an entrepreneur. What does that mean? I don't know. I mean, it's just to create businesses, to be able to, grow a company. I had always read about, sort of corporate America. And I thought maybe I would end up in corporate America. I always admired CEOs and presidents of large companies and just how cool that would be. Yeah. That was going to be a business school. You had to go through a whole progression there. So I used to play golf with my dad when I was young, and we'd go to lunch, and I was the little punk at lunch. But all of his friends were big real estate guys in Boston. And I'd say to my dad, well, what does that guy do? And he said, well, he owns 50 shopping centers. So I was like, what does that mean? He goes, well, that means he gets cash flow in 50 shopping centers. I was like, oh, okay, what's cash flow? So I'd learned, this was 13 years old. Right. And guys were building office buildings in Boston and skyscrapers and industrial. And all of his friends were all real estate guys because he supplied materials to them. And it's always stuck in my mind about, the interesting, real estate was an interesting business. It was a very long-term business. Yeah. It's a get rich slow business. And
we're always cash poor too.
Yeah, and you're cash poor, and nothing ever changes on that, unfortunately. You have enough to get by, and then, you hope for, some
a good exit or something.
You get a refi or someone offers something. That's why, diversification was always also my thing. I have a little quick story on that later, but essentially,
you were around the business from an early
age.
And by the way, a big reason why I started the Real Estate Deal Makers podcast was for that exposure to more people. Because for me, I stumbled upon it, and then when you're that's interesting. Yeah. You start asking questions, and 5-10 years later, you're fully into the industry. So when you went to college, it was UM, was it?
I went to UM. My undergraduate was finance and accounting.
Okay. There were you already real estate it is?
I really thought I was going to probably go work for an accounting firm and get a CPA and really not practice CPA, but just have it as sort of there, and then, go raise money and do deals to syndicate, do different things. So I was thinking that track a little bit. There was a guy named Alan Levan. Everybody knows him in the business. Probably doesn't remember me, but I interviewed with him. Yeah. IRE was his original company. Okay. I was going to be talking in front of doctors and lawyers and stuff to sell them IRAs and everything like that. Real estate backed. Yeah. That was my first interview. I also went to Southeast Banks, which is one of the big banks down here years ago. Yeah. And they had a credit training program, which I thought was pretty cool. Okay. And I had a lot of friends over there who said, yeah, we're going to do this for 2-3 years, and then we're going to go to get an MBA.
Okay.
I said, that sounds good. Let's do that. So I went through the credit training program.
So you're in Miami, graduated, stayed in Miami.
State of Miami, just went right there. I did actually, it's funny, before that I forgot, I did a quick stint. A friend of my father owned, another big real estate kind of guy, owned several ski areas.
Okay.
And I used to ski when I was a kid in Vermont at Sugar Bush and Glen Ellen. And my dad's friend owned it.
Oh, wow.
And he also owned several other companies. And I hired on there. He had an internship program. I went there first. I forgot about that.
Yeah.
And I did a 2-year stint with him, and I really wanted to run the ski areas. I thought that would be a great business and to learn how to do that. But I remember sitting in front of him one day and he's saying, Jay, you're too valuable to me. I need you to go to Rhode Island and run one of my companies there or help audit.
Right.
And the ski area is for bums, Jay. You're not a ski bum. I go, yeah, I am a ski bum.
Yeah, this is great.
And he said, no, you're not. I'm not going to let you do that.
That's funny.
And so I went there. I got bored. Then I went into banking after that. But banking for a couple of years, then said, okay, let's do the master's thing. I started applying with Manny De Zaraga. Actually,
oh my gosh,
Manny,
I should have him here too.
Manny and I took the LSAT and the
no way.
Yeah, and the GMAT both at the same time. And you know, I had some friends of mine that were lawyers, and they said, listen, Jay, unless you're going to be a top lawyer, don't bother applying to law school, because it was the same theory of wanting to get the law degree. Behind me, I always believed in education. So applied to a bunch of schools, didn't really get into my primary schools, but an opportunity came up to go with CBRE, Coldwell Banker,
at the time.
Commercial. So,
and this is what, in the 90s?
This was 86, 80s? I hate to tell you. So I got hired with CB. And funny story, Tom Patrick was the manager, and I interviewed for 2 months. Hank Klein was there. There were a lot of famous David Privé,
big names.
Lot of famous Mike Klotz. Brian Gale was a rookie there at the time. Terry Blanca started with me. A lot of other people. Mark Levy from BBX.
They're all people I should interview. It's crazy.
Yeah, Renee Vivo. I mean, I could go on the list of people that have gone on to entrepreneurship. But I sat there with Tom and he said, listen, I want to hire you. I have one question for you. And he said, you play basketball, right? And I said, yeah. He said, can you go up with your left hand? I said, yeah. He said, you're hired. So they had a basketball game that night. And and then the big thing.
Phenomenal.
The big thing with them was softball league back then at the local park, and the basketball. They really wanted to win those things.
Hilarious. And was it for brokeraging and CBRE, or what was kind of like
I started off in multifamily. I trained under a guy named Doug Miska. Doug Miska went on to work for a guy named Jim Goldsmith. Be partners with Jim, and those guys bought hundreds of properties, and they actually own a sizable property with them that I did. But I trained with Doug. Doug was the master at the time, the Zen master. So 1 year in, Doug said, I was starting to figure it out a little bit and get my mojo, and Doug says, hey, I'm leaving. I'm going into the principal side. Oh, wow. I said, Doug, I just got here. And he said, you're on your own, pal. So that's where I started.
And it was sales, investment sales,
multifamily.
In Miami.
In Miami, yep.
Got it. In the 80s.
In the 80s. So I started off walking South Beach, taking pictures of small buildings.
No way.
We didn't have computers. I hate to say.
Right. Co-star.
Hate to date myself. We didn't have any of that. So I used to get chased by old people in brooms saying, you can't take a picture of my property. I'm in the street. And I said, I'm in the street. You can't stop me from taking a picture of your property. And they said, get out of here. It was crazy. So, but we learned, there was a technique from San Diego that had been passed down to take pictures of every building and catalog them. Right. So when you're talking to owners, you have the pictures, say, oh, I love your blue awning, and I love this. And so those are some of the tricks of the trade that we used to do. And then I went to bigger buildings, and there was no institutional business really at that time. That hadn't started probably till the 90s when, I competed against Mark DeBaptiste and Dick Donnellan, from ARA, and they actually all started.
I mean, Dick Donnellan under Hampton and Avery now.
Hampton and Avery, but I used to compete with those guys. I did bloody nose against those guys. I mean, we won every deal. Head to head. We pitched, and we won some. They won some.
Well, this is my life now. Every time I go in to pitch a deal, it's the same 3 or 4 groups.
Well, the competitive nature, I think, is far deeper. I think everyone's a lot smarter, more educated.
Oh, it's wild.
You have the tools, incredible tools now. But what I learned back then in brokerage, actually from Dick Donnellan, which he said to me, Jay, I'm going to teach you a little something about this business. I shouldn't, because you're a competitor. It's all about relationships.
Yeah.
And he said, when you have a relationship with someone, it's much harder for them to say no. They're not going to give you the listing.
Right.
So I go, okay, so what do you do, Dick? And he goes, dinners, you travel to every city, you go see them, you do reports, you do, I competed against Dick and Mark over the years, and one time I lost a couple of deals in a row, and I said, shit, pardon my French,
I'm on my game.
How do I lose these deals? And I called the client, and I knew the clients well enough that they said, they were honest with me, and they said, well, it was the PowerPoint. And I said, the PowerPoint, what's that? They go, well, Mark and Dick came up with this incredible presentation about South Florida real estate, the sales, kind of like what everybody does today, the standard.
Yeah.
We never even heard of this.
Yeah.
They had an extensive array. So I was trying to get a hold of it. Nobody would send. One of the guys finally said, look, I'll send it to you, but if
you got the PowerPoint?
If Mark and Dick find out, they will skewer me.
It's funny you say this. When I get like a BOV, a pitch from our competitors, I'm like, I
see it?
Yeah. I'm like, give it to me. And I've gotten them like printed out, and I feel like I've got the keys to the kingdom, how their secret sauce.
Yeah, I find it's funny. I have to make special mention too. Robert Given I hired.
Yeah.
Denny St. Romain.
You hired Robert Given?
Yeah. Well, Robert, I'll tell you about that in a second. But Denny St. Romain was also. He told me once. He said, "Listen, Jay, if you don't have relationships with these guys, deep, and then you're not in there, and you're not playing golf with them last week, and it's going to be much harder." So, long story short, I got the PowerPoint, and I was blown away. I said, "Wow, this is a piece of work. This is artwork." So I went to my team at that time. I said, "We need to copy this." So,
real quick, when you're going head to head with these people, are you in your mid-20s, your early 30s? Like when you started,
I was. I would say the top of my game was like really took a good probably 10 years. I mean, I was probably late 30s. I would say early 30s, mid 30s to mid 40s. That was the top. That 10 years.
So when did you start brokeraging? If you could remember?
I started in 1986.
And you were 23 or like 27?
I was 27.
27. So from 27 to like 35.
27 to 35 was just grinding out like crazy.
Do you have one of those stories where you're like, within 3 years I was making $300,000-$400,000, or was it like it was tough?
Yeah, I mean, I'll tell you a story. I was living at the time with some friends in a house. We shared in a room, and I had my first big deal closing. And the guy that owned the house was a Harvard guy, MBA, way back then, and he was a friend of mine. Mm-hmm. And I came in one day. And I think I was behind in the rent for like a month or two. And, I didn't want to call my dad and to borrow I didn't want to have to hear, because he would say to me, go out and get a real job or something. So I walk in and I heard my friend, I don't want to mention names, said, is he like a loser or something? Like, is he ever going to pay me? Yeah. Or are we just going to have to like evict him?
It's crazy.
True story. So I went, oh man.
I really got
So the next month, the biggest deal of my career had closed, and I think it was, I want to say $100,000 to me.
Yeah.
It was.
I know when I got my first $100,000 check, I was like, whoa.
So the first guy I paid is, my dad used to say to me, I hate being in debt.
Yeah, it's the worst.
He said, I always pay back my dets. He said, not a mortgage or anything, but even a mortgage, yes, but if I borrow some money or if I owe people, I don't want to owe. I want to give it back to them. So
going back to relationships.
First thing I did is I did a beeline to the guy and paid for like the next 6 months.
You're like, I'm not a loser.
Yeah. Then I met my wife shortly thereafter, and we moved in and got married and all that kind of stuff. So the rest is history there. But from then on, it took me 3 or 4 years to really start to make money. And then that's when it kind of increased each year, and I was trying to double it. And that's when I started, I started off an associate, and then went to sort of, I don't know what the titles were.
Yeah, director,
and then there was like vice president, and there was like senior vice president. And then the vice chairman one was tough because there was only 11 of us when I first made vice chairman at CBRE, and I want to say it was in 2003 maybe, or 4. You had to crank it out pretty good. And so there was, Darcy Stakem in New York, and there were big names in there.
And were you only doing like Miami, or was it South Florida?
No, at that
like,
time, as time evolved, I got into the institutional group. So there was a guy named Malcolm McComb out of Atlanta. There was Brian McCoff out of Chicago. There was
You're good with names.
Sean Dacey. But these were my friends too.
Right.
There was the Dallas, Dirk Goris from Dallas. There was Sean Sorrell, God rest his soul. He passed away, out of San Antonio. And then there was Tyler Anderson and Sean Cunningham in Arizona.
So were you like the Miami guy? Were you the Florida guy? Like,
I was the Florida guy, the institutional group, but we pitched big portfolios around the country. Okay. So this was when the institutional group was forming, and we started to like go and do like Wall Street type pitches, a little more investment banking-ish. We were learning about how someone had said, I said, does that make us investment bankers? They said, well, we're like low paid investment bankers, or we're like lowly investment, we're not real investment bankers, okay? So I said, okay, fine. I thought maybe we made
It's funny, when I got into the business, I would tell people I'm in commercial real estate investment banking, and I knew I was for sure like overselling my position. I was like, I'm a broker running around trying to put deals together.
I'm just a broker. I'm just a lowly broker.
So you ended up brokeraging, because my understanding, this is what I heard, right? And obviously we know each other well. We've worked on deals together and stuff like that. I heard you were like the presence that Robert Given has in South Florida today. I heard that was like you across all of Florida, pretty much.
Yeah, I mean, I worked on it. I went to public speaking practices. I did. I had custom suits. We were the.
Did you ever do a coach? Or no coaches?
Yeah, we did coaching for sure.
Yeah.
Coaching was interesting. I had a 16-person team at one time. Robert Given, Denny Saint Romain, Gerard Yetming. Charles Crapes, a couple of guys that did well, but they moved out of state, and then we had a production team and everything like that. I had to lead a team, so all of a sudden I was like a little mini CEO. Robert Given, I was telling him, he was one of the, and Denny, those guys were, and Gerard. It was we had the A team. We had a really good team. And I had guys. I mean, I was pretty much the business development guy, and I'd bring in deals and I'd hand it to different guys, and I'd hand a deal to someone that'd say, hey, how come I didn't get that deal? And I'd say, well, Gerard, had a special skill set on this one. And then
sold the deal next door, or whatever it is.
And Robert Given, is a good friend of mine. It's just always an A player. And so when he came up, it was great. We had an amazing team, and I guess I could have stayed. I know you're going to ask, how did I decide to leave? So, so at that point,
if I may, I want to make a comment. So, in my experience, most people coming out of college want to be in the principal side. They want to work at Blackstone. They want to work at HIG. They want to work at whatever, Eden multifamily, whatever it is, because it's cool to be raising capital, buying buildings, and things like that, right? I started on the principal side. And what I noticed very quickly, and I'm not saying this is good or bad, but just in my situation, what I noticed was I had a salary, and I wasn't really going to start making $300,000, $400,000, $500,000, $600,000 until I was 10, 15. I had devoted my life to this company, or I was opening up my own shop, raising my own capital, doing my own things, right? Then I started meeting brokers as I was buying multifamily from them, and I started meeting these smart, guys that structured their days. Ran their own lifestyle, worked like dogs, obviously, that you can't get away from that. But I'm like, okay, they're in their late 20s, early 30s, making a couple $100,000 a year and like growing. So for me, I was like, brokeraging seems really interesting. And I'm a salesy guy and I like marketing and all that. So what's interesting, and how I want to tie this back up to you, is like, you were in that route. You absolutely crushed it. Like, you were I've heard from many, many people, and I know this myself, that you're like the best broker in the state of Florida. Everyone knew you, everyone loved you. And then you're at the top of your game and you decide to pivot into, again, entrepreneurship, building your own company. So walk me through, how old were you? Or before you walk me through how old you were when you made the transition, did you, in your mid 30s, in your late 30s, already have like a bug to stop brokeraging? Or did it just sort of happen?
There's a simple answer to the whole thing. My grandfather came over from Russia, the oil country, in 1900, started companies, sold them. My dad came into the business, very entrepreneurial, very hardworking, seat of the pants, kind of I don't say wild man is not the right way to put it, but he had 500 employees and he ruled by fear. My father, and we would watch that as kids and we were like horrified, like, wow, really? He's going to just yell at everyone in the boardroom? I mean, so, but I admired the entrepreneurship, sort of bug, I think is in my DNA.
Yeah.
So when I got into brokerage, the original plan was let me get in for 5 years, kind of learn the business a little bit and then figure out what segment of the development or investment business maybe I could get into. Back in 1986, honestly, private equity and all that was not a known commodity like it is today. And I always say private equity back then was like a license to steal because you raise a whole bunch of money. You have to be smart. You have to raise the money, but then you can buy like anything. Like I have friends of mine that are in private equity. I said, what do you mean anything? Well, Jay, I can buy a tulip farm. I could buy, a skyscraper.
And it's a steal.
And I can just figure it out. And so I always said, wow, if I had missed it, that would have been the one that would have been fun. Wall Street was not in my world that I knew. Didn't really know about it. I mean, it might have been cool. I mean, all I knew is at the time I went, you needed like a pretty good B school as an entry in. There. I had one of my father's friends made markets for stocks and he wanted to throw me in the exchange. Imagine I could have bought a seat on the exchange. He was going to buy a seat for $200,000 in the New York Stock Exchange. And I said, what do we do with it? He said, it's got to be valuable. Buy it, and then I just go and you start trading stocks in the New York Stock Exchange. But at that time, I worked out, I played lacrosse. He said, you need to be big because you're in the pit with the guys and you're fighting and you're trying to get the tickets up. I go, that sounds like fun, right? So I contemplated that, but then the CBRE, or Coldwell Banker, now CBRE, came in. So I said, let me do that for 5 years. Once I got in and did so much hard work, 6 a.m., go to the gym. The thing is, I'm still in the same routine, which is crazy. It's just work ethic just gets in your DNA.
It's 1,000%. I'm like a robot.
And like I have to do that now. So pretty much I overlaid the same kind of work ethic I did in the principal side, but I'll get to that in a minute. Once I got to 5 years, I started making money and then a little more money and a little more money. And all of a sudden, it was like, it was very difficult.
The snowball's rolling.
I always say I had the golden handcuffs on me. I had what's called the pipeline. We had, 20 deals and then 30, 50. And I think we were doing at one point, 50 to 70 deals a year, crazy land, this, that, financings, all kinds of different things. The capital markets hadn't evolved yet where, if you buy the deal from me, I got to do the debt. And I have to place the equity and I get, triple dip. As there was a guy, Bob Doherty. He always, the old, guy that another
his son works with us now, Bobby Doherty.
Right. So his dad, I don't mean to say old.
No.
I meant to say, sort of veteran and one of the big guys at the time used to call it double dipping and triple dipping. You do the brokerage, you do the debt and the equity. I was like, wow, that sounds pretty interesting. We didn't even know about that. So that all started about the same time. But essentially, I was grinding it out. And I think about 45 years old, I think roughly 2006 hit.
You're making over $1 million a year, I'm assuming. You're crushing it.
Well in excess. And then in 2005, we did the condo conversion craze, which I did about did about 20 million in gross fees at that point. Funny story on that. I was a number 2 producer for CBRE nationally in 2005. So I went to the national conference and Brett White was the chairman of CBRE at that time. I think he's Discovery Land now. So I said to Brett, hey Brett, how far was I away from being number 1? He said, you were far. I said, come on, you can't give me an answer like that. You got to give me numbers. He said, double what you did. And I said, no. I said, who was that? And it was a guy named Bob Powers in New York City who did a Port Authority lease for 2 million square feet. And he was a leasing beast.
Machine.
And I said, okay, which always taught me that essentially there's always someone bigger, better, faster, stronger. And it's just the way it is. You got to figure out competitively where you fit it, right? So, but building teams, I really learned from CBRE. 2006 rolls after the condo conversion craze. I flew all over the country, did condo conversions in Boston, Dallas. I got calls from all my peers and said, "Hey, Jay knows how to position these buildings, how to price them."
Yeah.
And so I went around the country doing that.
Yeah.
And then by 2006, I was like kind of, I would say almost burned out at that point. After 20 years, I'd say a full military stint.
Brokering is a like you're grinding.
Yeah, so I sat back and the market started to wane in 2006. Obviously 2007 to 2010 was the big downturn.
Yeah.
And I sat and thought to myself, the golden handcuffs are kind of coming off, like the pipeline was drying up.
Right.
And I said, if I'm ever going to jump to the dark side, which I always call the principal side, I said, now is really the time. I felt like I had all the tools.
Yeah.
I felt like I knew everything that I could learn. All I could do is work harder and do more deals. Like I couldn't, I was at the pinnacle of vice chairman of the highest title and the highest everything.
Yeah.
And being an achieving type of guy, I really, really wanted to be back on the principal entrepreneurial side.
You wanted a new summit.
Yeah, I remember talking to Robert Given about it. He said, don't tell guys you're burned out. That's not a good thing to say.
It doesn't sound great.
Tell them that you want to be on the principal side. And so what you want to do
it's
your
good
whole
advice.
life, which is essentially what it was, but it was just semantics, and Robert was great. So,
by the way, I was talking to the head of investment sales of a big brokeraging company. I don't need to name him, but he's looking to transition from a broker. And what he told me is like, Omar, what I realized is like brokeraging is a young man's sport. And it's a beautiful sport, but like he's in his 50s and he's just like, I got a sunset.
Listen, I'd give you, if you give me a nickel for everyone I bumped into in the world. It's a funny story, I'll tell you. Everywhere I go now in the principal world, when they find out I was with CBRE and the brokers on the other side, they want the stories. Yeah. Tell me what happened. How did you transition? What exactly what you asked me? Yeah. They all want to know because secretly they all want to figure it out. What I had contemplated at that point is I had everything I needed. I had a great house. I had a country club, my kids, good schools, money in the bank, nice car. I really, at that point, I didn't have a jet. That's always the ultimate, but don't worry about that. I don't care about that really. I felt like, for the second half of the game, it's almost like, Super Bowl, right? You go in at halftime. Yeah. Or Michael Jordan when he hung it up after 6. I'm not trying to compare myself to him, but I'm saying
you are the Michael Jordan.
No, but six rings, and then he hung it up, and maybe he still had game left. Yeah. But it wasn't the same. But 45. I said, you know what? I went into halftime and sat in a locker room with a towel over my head,
with the flu. No,
and just thinking, okay, what am I going to do? And I said, you know what? I felt like I was well positioned to risk it, and went home and told my wife that day. I said, listen, I'm going to leave. And she said, we're on vacation. I said, no, I'm going to leave CBR. She goes, wow, that's a huge decision. We talked about it. She said, listen, I'm on board. I believe in you. I trust you. At that point, I just really said, you know what? Now you got to trust your gut on these things. So, and I went to Robert Given. I said, listen, I'm going to give you the keys to the Ferrari, but you can't crash it. Okay. So Robert was ecstatic. He's like, "Oh my God, I'm getting this business." Which of course Robert's crushed it. Yeah. But in all testament to Robert and his team and Denny and the rest of the guys, they're all great and they work super hard. And Robert always tells me I'm the hardest working guy he knows, and I say you're the hardest working guy I know. So, it was great. Robert threw going away parties. We had going away from all my guys nationally, locally. And there I was on January 1, 2007 on 444 Brickell on the 3rd floor of a Class B office building in my own little office by myself. I hadn't put a team together yet. I hadn't really had time to do anything. And one of the questions that I get asked is, if you could do it all over again, would you stay in brokerage?
That one's coming.
No, I'm glad I did it. Or what was a big lesson you learned? Mm-hmm. The big lesson I learned is I didn't know anything. As much as I knew about brokerage, it's like when I started raising money, people were like, well, Jay, you were a great broker, but like this doesn't mean you're going to be a great principal.
Investor, yeah.
So, and I was like, I had to, so I had Whereas I went 20 years at the top of my game, people were not questioning me. Right. I wasn't used to being questioned about, and and then I realized what took me realize that in the principal world, you have to find the sites, you have to get them financed, you have to raise the equity, you have to manage them, you have to build them, you have to rehab them. There's about a 10-point list that you have to be pretty adept at, which I really literally knew nothing about.
Yeah, brokeraging, you're in and out.
So I said, okay, I need to hire an asset manager. So I went and hired an asset manager.
So, but walk me through this. You were how old when you transitioned?
I think I want to say 45.
Okay, but my thing is at 45, with all these connections, all these your reputation, money in the bank,
everything,
you transitioned with nothing. Like, what am I going to do now?
A lot of people do it differently. What happened was that for me, it was like a timing. Like I knew I had to get out. I actually have an interesting story about it. I just knew that. I had talked to some mentors of mine and said, hey, how do you think I should do this? I had friends of mine that, very wealthy, call him a billionaire, who said to me, listen, just start buying small apartment buildings, and which would have been a pretty good thing also, and just keep brokering and, just kick back a little bit, let Robert Given, to take the wheel, and then you'll do the investing for the partnership, and Robert and you will invest. And there was all these different iterations. I bumped into one investor who said, Jay, listen, when you want to cut bait, he said, you take the Band-Aid and you rip it off. He said, his opinion was, if you're going to be in, you got to be all in. If you
want my money, you
he was just saying, if you really want the credibility and you want to be able to build this, you have to just make a commitment, So I thought about that, and there were, and this before I left, I thought about these, but then I said, I'm ripping the Band-Aid off. I'm going right out.
Wow.
So I went out, a very big broker in town, who shall go unnamed, who's a very nice guy, came to me. He called me when he heard I left, and I'm in my office. Really, literally the next day, he came to visit me. And I was excited because I said, wow, here's a guy, he's got tons of deal flow and stuff like that. He actually came because he figured I was sick. He thought maybe it was one of those things where I had
cancer or something
bad. I hate to mention, it's a horrible thing.
No.
But he really thought that I left because I was just sunsetting, and it was just my way to get out. And I was like, whoa, man, that's a wake up call. Anyway, I hired this asset manager. Shortly thereafter, I started calling the institutions and all my contacts. Lehman Brothers. My friend from Lehman Brothers at that time, who was in business, said to me, Jay, we're going to give you $100 million to buy B and C apartments. And we know you don't know, pardon my French, shit, but we think that the skeletons are buried, and we think we'll figure out the rest. Just find the deals. I said, done. So shortly thereafter, I had another friend of mine call from Morgan Stanley, a big asset manager who had a fund. He said to me, I'm going to allocate $100 million. For you also. When I told him, well, it's interesting, because I didn't know how it worked at that time. I said, well, Lehman also. He said, no, we'll go invest with them. We'll figure it out. He said, actually come to Atlanta. They had a regional office in Atlanta. So by the time we got organized, it was July 6, 2007. And if you want to fact check, like everyone says, the politicians, I don't want to get into politics, about fact checking, but I think it was July 7th, 2007 when the market cratered, and bonds were being quoted as 3,000 over, and basically the game was over. July 6th of 2007, I was in Atlanta at a dinner with Morgan Stanley, with the asset manager at the time, 10 people, drinking wine, eating steaks at wherever, Christie, whatever steakhouse was up there, I forget, Ruth Chris, basically celebrating the $100 million they were going to give me, and that we were going to kill it, and there was going to be more money to follow. The next day, that night, the market crashed. That after the market closed, it was done. The CDOs, everything, the big hedge bet, the big short, all that stuff was coming to fruition. right at that time. And I didn't know it, of course. So I go in a conference room and I'm waiting for this asset manager to come in, and there's just people scrambling outside. And I got there, worked out. I saw him working out. He had his headphones on, said hello to me. Got a good workout. I was pumped up. I had my white crisp shirt on. I said, I'm ready to go. 3 hours later, I'm like, man, this is weird, right? So he comes in, he sits down, he said, listen, he said, unfortunately, we're not going to be able to make the commitment to you. And he said, and above that, he said, I don't even know if I have a job after today. And we're probably going to end up closing the Atlanta office.
Oh my God.
So
you knew you couldn't talk your way out of this one.
No, I was like, what? That was my timing. Okay. So I fly home, my tail between my legs, and I'm like, I don't even know what's going on. And then I figured out that the market cratered. So Lehman went out of business.
The other 100 million.
They were done. Bear Stearns was done pretty much at that time. Or was it? I think it was Bear Stearns.
Yeah, Bear Stearns, Lehman.
And it was over. So I had this whole business plan to buy BNC multifamily. I'm sitting in my office, and it's game over. So now I have to try and figure out from scratch what to do. So that was the first big, tough, hard knock.
I mean, in hindsight, you should have bought everything you could have got your hands on. And
raising money at that time was extremely difficult.
I heard like impossible. Yeah.
So I started. I regrouped and started buying, fractured condos, raising money just from high net worth. I did some deals with some guys in town, and there was I like to mention this. There was a particular investor from Colorado that was sort of mentoring me at the time, and he had been through downturns, and we were going to make a lot of money together and all kinds of stuff. And I would say I probably spent about a year just going through banks and calling and getting deals and everything. We got to a certain point, and I just didn't get a real good feeling about what was going on, and a series of things happened, and it didn't work out. Okay, and so I had a conversation with him, like, I've done all this work for you guys and all this kind of stuff, and what did I do to deserve this incredible treatment? And the guy said to me, "Listen, Jay," he goes, "You're a great guy." He goes, "Maybe you should just go back to brokerage." I said, "I don't think you're cut out for the business world for whatever reason, and you can't diversify in this business world. You have to be focused on one thing and do one thing really well." And I see you like multifamily, Jay. That's what you focus on. But you wanted to do these, fractured deals and condos and sales and these different things. And he said, "You're going to fail miserably. So I'm not going to be a part of it. I'm not interested." Or like, what's the thing when they said, "I'm out" on Shark Tank? I'm out. So he just said, "I'm out." And that was it. So that was a very interesting story. I always remember that because that has been motivation for me almost my whole entire career.
Wow.
About one guy who said to me, one really successful guy,
mentor,
who said, "You will never amount to anything. You're a fucking loser." Pardon my French. You guys can take that out.
No.
And you can leave it in probably because that's and that was a great motivation to me to say, you know what, I think I can do this.
Yeah.
And I at this point I studied a lot of great entrepreneurs and a lot of private equity and a lot of guys, and I'm thinking, well, they have diversified platforms. Like what? Why can't you have a little bit of diversity? So anyway, from that point. Then things started to gel a little bit.
Were you able to buy your first deal in
2008, 2009, I bought fractured deals. By 2010,
and these first few deals you're doing, are they $3 million deals, $20 million deals?
Yeah, I was raising $3 to $5 million of equity.
So they were like $10 million deals.
Yeah, fractured condos where you'd sell the condos. Everything required an expertise that I had to learn. And so I started learning and trying to put a team together and trying to figure out how to, piece this thing together. I had some fits and starts. I went back to one of my business coaches and, I sort of laid out the whole scenario and said, well, here I am. And he said, well, Jay, you're like a water skier underwater. And I said, well, give me some more image. Can you explain that?
How do I get out?
He said, you're you're on the toe line, but you're bouncing off the bottom.
Yeah.
You're hitting rocks.
Yeah.
You're dodging obstacles, and you're getting life kicked out of you.
Yeah.
And he said, but don't worry, it's a rite of passage.
Yeah.
He said, it'll be good for you.
Yeah.
I said, yeah, I don't feel like I need it, but this is all after being
right. Well, that's my thing. When you're 45, you are at the top of your game. Everyone knows
that
you.
all was done. That whole ego trip, or whatever you want to call it.
No,
you're the man.
I like the fact that you bring up ego trip because, again, I'm in this brokeraging summit right now, and I see. I mean, I can talk for myself from experience. Everyone's like, wow, you closed a big deal with Starwood, and wow, you did this, and like you do it with a team, and there's a big ego boost to it. And like, I try to see through it, and it's just like, yeah, it's fine, made some money, we keep moving type of thing. But transitioning, you're back to, not to zero, but like you lose that ego.
I wound the clock back to zero. It was like starting my career again in 20.
How was it? Like emotionally all that brutal or?
I had some sleepless nights where I used to, wake up at 3 a.m.
Yeah.
My wife's sleeping, the kids are sleeping in the other room. I can hear my daughter's gerbil running on the little circle thing, because every night the gerbil would run on the, you'd hear the squeaking of the thing. It was like one of those horror movies. You look up and you wake up and it's 3:33 a.m. every morning. Yeah. I realized I had cracks in my ceiling that I said, wow, where did that crack come from? I got to know my ceiling. A lot of sleepless nights, but I just said, you know what? I'm just going to keep powering through this. And one of the things of any entrepreneur is you are going to have tough times. Yeah. You're going to have ups and downs, and you need intestinal fortitude. You need staying power. Mm-hmm. My wife said, listen, I got you. Don't worry. I got your back, whatever you need. And so I hung in there. Fortunately, I had like a really nice house. I had a really small mortgage on it. So I would come home to this beautiful house every day.
You're like, I feel good.
Kids would hug me, and they didn't know what's going on. And,
you're still the best.
They
You're
didn't
still
know
at the
Dad
top
was
of your
like
game.
depressed or anything like that. So I started to get a little traction in 2011, 10 and 11, where I raised money with a New York investor, and we started buying B and C apartments. So bought a couple thousand units. I started a property management company. I ran into still a very close friend today, Paul Kaplan from KW.
Yeah. There's RKW?
Yeah. So KW is the condo. They're the third largest in the nation right now in condo management. Wow. But Paul was intrigued about apartment management. And Paul, CP, MBA, brilliant, kind of wears that pencil on his ear. And he was like, Jay, you're not going to be able to do this management company without me. I said, I agree. Because I had 5,000 units under management. And
so
I hired
real quick, because I know RKW was a huge success.
Yep.
So you first start buying multifamily apartments and building
buying,
private equity business.
Right, and wanted to do a vertical multifamily management.
And then you're like, okay, now I want to self-manage my apartments.
I wanted to
self-manage. That's kind of how it started, I'm assuming?
Correct.
Okay,
and I had Rivergate.
I now want to manage.
I had Rivergate Management.
Okay.
And, I was trying to put this thing together to raise money and
it's a lot.
Well, this is when this is like being in a Michelin 3-star restaurant. You're the chef, you're the server, you're the food preparer, you're the
busboy,
everything.
The valet.
That's what I was.
Yeah.
So when Paul came along, it was a great, I said, done. We actually, it's a funny story. We had 3 breakfasts. It was like a love fest, he calls it. It was like a bro fest, like a
back to back, just like
whatever you call it, bro love.
Yeah,
we were like,
that's what me and Tyler got going on right now.
Yeah, this is great. So he said, let's just do this. He had 5,000 units, disparate management. I had 5. We just did a 0 merger, straight up.
Perfect.
No money.
Yeah.
We merged. We had 10,000 units at that time.
Yeah.
We hired Marcy Williams from Graystar, and Marcy was 20 years in the business, only 2 employers.
So how old were you?
Graystar.
So 40,
at that point, I'm more
45. You switch into the real estate.
Yeah, I was like 50.
Okay.
Around 50 at that time. Unfortunately, I missed YPO because I timed out age-wise.
Yeah.
And so
you start RKW.
We started RKW. Look, we quick to fast forward. We grew that in 10 years to 30,000 Class A units, 400 employees.
Nationally, was it national?
No, we were regional. We were in like 10 states.
Okay, like Southeast.
Based out of Charlotte and South Florida.
Yeah.
We had impeccable numbers and financials. Our hiring, we we were our own ADP.
Yeah.
And so we did our own insurance, and we were the liaison of the insurance and workers' comp.
The top line revenue of a company like that, when it's at the level you had it at, is it 20 million a year, 100 million a year?
No, what happens is that you want to get to about 10 million a year. We had got to about 4.5, no debt, just free and clear after everything.
Yeah.
So it was great. So we hired Goldman Sachs. They have their sort of small cap division because they knew everybody up and down the stack to try and find someone where we could become the next Gray Star and grow nationally. We put a deck together, put it out on the street.
This is investment banking, right?
This is investment banking. Yeah. So we put a deck out, and we interviewed a bunch of people. Someone came in and offered us, made an offer we couldn't refuse. Over 10 times EBITDA at the time. And Paul
EBITDA, but 5 million wasn't EBITDA, or it was.
Well, it was a stretched EBITDA, but it was close to 5 million.
Yeah.
But basically, we hit all our targets, earnouts, everything, and it was an incredible execution. And it's a tough business.
It's a
property management business.
It's someone's home, and you're like,
is brutal.
It's brutal.
Well, dealing with tenants, but we were all high end. Yeah. When Marcy came in, she said, I know we have 10,000 units. I want to fire all the owners, and I want to go to only Class A. So we transitioned out of that 10, built up another 30.
Yeah.
And really very tough business, a whole separate conversation. But so we exited that in 22.
Yeah.
In 2000.
So how long was the route? That was 10 years?
10 years, yeah.
10 years.
So during that time, I started another company, self-storage development. Mm-hmm. So I had built one self-storage facility. I invested when I was at CBRE.
Yeah.
And I sort of liked that business. So in 2012, I was talking to Robert Kaplan, and I said, Robert, I'm thinking about sort of getting back in a storage development as an adjunct. And he said, well, let me introduce you to someone right away. Don't even think about doing the business. So I got introduced to my partner, Stephen Garchik, from DC, had built 40 or 50 of these previously in New York and DC, moved down to Boca. Robert introduced me, and we shook hands and said, let's build them. Mm-hmm. I didn't think we had an operating agreement at the time. So I started he said, Jay, I can build them. You go find the sites, the skeletons.
Right, you can.
So I found a whole bunch of sites.
So this is 2012.
2012.
So 2012, 2013, call it, you're in your mid-late 40s, and you've got the multifamily investment business, you've got the property management business, and now you've got the storage development business.
Correct.
And I guess for you, is it just like, you've got this sounds interesting, I want to do it, and it sort of just pulls you, or like, because most of the guys I know, they're like, I do multifamily and I own 5,000 units and this is what I do.
No, so along the way you see people and you meet people sometimes where you say, I like what that guy's doing.
Yeah.
I had a client, his name is Felix Granado Sr. He was from Cuba. He's friends with, the Van Hoels and all the big families. 1960, got kicked out, the story. And he had built up an empire of B and C properties. So every time I went to see him, he'd light up a huge cigar. The room would fill up with smoke. I'd walk out of there smelling like cigar smoke. And one day I said to him, Felix, listen, what advice do you have for me, if I want to, build a business and everything? Mm-hmm. And he said, Jay, he lights up his cigar and puts his feet on the desk. He says, what properties do I own?
Yeah.
I said, well, let me see. You own these sort of like B quality apartments that you built. He goes, exactly. What else? Let me see. You own self-storage. Right. What else? I said, well, you own retail. He said, but what kind of retail? I said, I don't know what kind of retail. He goes, well, I'm in 441 West. He said, I don't have any major tenants. I have mom and pops. And he said, in fact, so I have one thing in common with all the properties I own. Between the storage, the multifamily, and the retail, he says, I don't know one tenant's name. I don't have CVS. I don't have a law firm. Yeah. I don't have big tenants that they're going to leave and 50,000 feet goes vacant in the middle of the night and goes dark. Yeah. It's all, sort of, that type of real estate. So I always remembered that. Yeah. So I said, okay, I like that model. So that's kind of like just emulated his model. And that's where I've ended up. It's morphed a little bit now. But
can you touch on partnerships? Because I feel like, and we haven't, mentioned like Jay Jacobson, who obviously comes into the story and stuff, but I feel like you do a phenomenal job of finding and picking and partnering up with the right people. Yeah. And when I meet your partners, they complement you very well.
My whole success is my partners. I did my part. I plugged it together.
Yeah.
I plug and played, but I aligned myself with partners that really knew what they were doing and really good at what they did.
Right.
Jay Jacobson is a fabulous partner. He's built 35,000 units. Wood Partners, Archstone,
Legend.
Styles. And I always say there's no one that knows how to build a multifamily project pound for pound better than Jay Jacobson.
Yeah.
Down to you can't put that column there because that's going to cause this problem, the transfer beam.
What the brokers don't know.
Yeah, well, he's an architect by training.
Yeah.
I always call him a reformed architect.
Yeah.
The same thing with Steve Garchik. I mean, Steve, Wharton MBA. I think Steve has a CPA. I don't know, Indian Chief. Steve is the kind of guy that will do an agreement with a lender, any lender, and Steve will read the docs, and he'll be like, look, page 68, paragraph 8. I'm not going to sign that clause, and I'm trying to look through there to see what he is.
You're like, where is it? Where is it?
It's great. I always preach this, that you want 1 + 1 = 3
right.
in the business.
Yeah.
To have a partner, and that was where at CBRE where I learned that you don't just want to have these guys where you can just double your business. Mm-hmm. You want to be able to get together and triple your business, right? So with Steve, it's the same way. And so the partnerships today are Eden Multifamily with Jay Jacobson, right. Mark Chasen, Tyler Anderson. My son is now in the business. Drew. You've got Jackie Sassoon. Just a series of A players in that side. On the self-storage side, Steve and I, after our first portfolio sale, which we timed great, we kind of looked at each other, what do we do now? We said, well, let's just keep going.
This is self-storage?
Self-storage.
Okay, yeah.
So by this time, in the 2000s, there was data. Mm-hmm. We had big data. Yeah. So we were able to actually plug in numbers and actually know where to pick sites, right. which we didn't really have early in our career. And so we hired a guy named Dan Weinstein. Dan was a developer out of New York, previously Public Storage, and where I met him. He tried to buy one of my assets. He was, I think, East Coast Acquisitions. Dan is now, the president. The COO, Anthony Scavo, came from LaFrac. Okay. He was there 28 years.
Wow.
Construction, finance management. Yeah. The dynamic duo of Anthony and Dan. Steve and I are co-chairmans of that's Basis Industrial. Mm-hmm. We've morphed from the self-storage into. We have a number of facilities under construction up and down the East Coast now.
Industrial, not self-storage.
In self-storage. Yeah. And then on the industrial front, we're going to be at 5 million feet by year end. Wow. Of small.
Did you just start Basis Industrial?
3 years ago.
Yeah. And
so we're at 5 million feet, small bay. The brilliance really of Anthony and Dan and Steve, and I'm hanging out to everybody's coattails. I do my thing, the brokerage. So where does that it always comes back because someone always knows me from somewhere. Yeah. And everyone's always like, how the hell do you know all these people? Right. They heard my name, they know someone, their dad knew me. Yeah. So there's the real estate world is this sort of, this sphere. Yeah. And the sphere of influence. So so I do my now CEO role of just, meeting with lenders, meeting with bankers, meeting with equity partners.
Are these companies structured similarly?
A little bit different. So I'll tell you real quick. So Basis Industrial.
Is that one now merged with the self-storage? They're one?
Yeah. So what we did was we took the self-storage vertical and the small bay. We put them all into Basis Industrial, rebranded. At this point, we are now talking to much larger institutional players for significant equity contributions to really grow this. So now we're at 5 million feet. We want to go to 10 million feet and 15 million feet. Right. Because the small bay space, it's in an interesting niche because you have to have your own vertical management. So we started a management company, which interestingly my brother works for.
Management, is that meaning also leasing and doing?
Management, we do all the management and leasing. We have in-house counsel. So we have about 45 employees.
Because that's the edge of that business.
That's our edge. That's if people that lend us money want to say, well, how are you guys
lease it up
doing this? Yeah. So we now have a couple of million feet in Dallas, Houston, Fort Worth. We're in Florida. and now we're going to expand into the Southeast. In a little bit further.
Yeah, I've met people that tie up an industrial deal that's got $12 rents, and within the due diligence period that they're refundable, they find the tenant that can pay $16. Correct. And it's already like money in the back.
We've done that. We have this market-to-market program where, a lot of these are entrepreneurial owners, and so we're kind of institutionalizing. Kind of like Dan always says, the storage business 10 years ago. So it's a great business model. It's very exciting. People say, well, Jay, how do you split your time up? And I would say that it's more of like Adam Newman's flow. It's just a flow. I go in the morning, I'll be on 3 conference calls for basis, 2 in Eden after that, 1 on Eden multifamily. Back to Eden for a moment. On the Eden side, we also grew that platform. So Sterling Equities out of New York. We sold half of our interest of our multifamily vertical platform to Eden Equities. We have another platform called Eden Living. So we have about 1,000 units under construction, build for rent, single family and townhouse product. And then we have our multifamily, which we've now added a condo division. Because we had a high-rise multifamily rental site that we tied up a couple of years ago, had significant money into it, realized we were not going to get a rental financed, and said, well, why don't we just redesign this? Condo. And so now we're sort of in the condo world, but we are venturing that with a very large, established, multi-billion-dollar institutional, established player in the condo business that has their own sales team, everything like that, which will be announced soon.
I feel like I already know who it is.
We felt that a $300 million deal, probably we should bring in some expertise in that.
Exactly.
And we find a lot of the big,
which is a great, it's good
related
perspective.
Partners, everybody partners,
everyone partners.
Right? So we said, you know what, we like that idea. So we've done that, and so we have this we have a second condo side coming now, and so we have this condo division. Mark Chasen sort of heads up runs point on a lot of this. Mark just got promoted. Hasn't hit the papers yet to executive VP and partner. And so
I'm a big fan of Mark, by the way. He crushes it.
And so our whole company is comprised of mostly under 40. I would say almost across the board. I would say I'm almost the oldest guy, but Garchik has me by a little. And Jacobson ain't gonna be happy, but he has me by a little too. So I'm the youngin of the senior guys. But we have mostly young guys they're just really great. They've been with us a long time. They've learned with us. They've suffered the pain.
And I feel like brokeraging also helps you learn to juggle a lot of balls, right? Because when I think about the brokeraging business, mind you, the balls I'm juggling are very similar. They're just different stages. But I remember when I started my brokeraging career, if I had 3 deals going on, I was like at capacity. Now I've got 12 deals going on, and you call me on one of them, and I'm like, so-and-so and this and that.
So back to that Colorado guy. He said to me, multitasking will be the death of you. Okay. And what really ended up happening in my life, and I probably send this video to him just so he can get a kick out of it. Multitasking actually is how I've gotten where I am today. And, this is all, you have to believe in yourself. You could have people come to you all day long and believe in you. It's not going to cut it. You have to get up every day and believe in yourself. And look, this is it's a young man's game to a certain extent. I get up every morning, I work out, right?
You're like, I just came out of tennis, and I'm like, I just came out of
I've got some kind of thing going on. The same way. And that's my therapy. I'll beat the tennis ball with a pro. I have a trainer that kicks my and I willingly do it because I feel at that point in time there's nothing you can do to me at that point the rest of the day that's gonna be worse than that
than the ass whooping I just got.
But that's so I think there's certain there's certain things that it's interesting. When I wanted to be an actor when I was in high school, and I was thinking of Hollywood and doing some things, did some modeling, that kind of thing. I remember I went to an acting coach and they said, well, there's certain things you need to do, as an actor. you need to be in really good shape. You always have to be in incredibly good shape because it's a strenuous business and you're working late hours,
your body,
and everything like that. I'd say very similar to what we do. Fortunately, you also it really helps to love what you do. It's almost like talking about baseball, talking about other sports. I remember the Marlins when they won the first World Series. They had a bunch of baseball players from Latin America. Some of them, had trouble speaking, really good English, and they would interview them and say, well, how do you? He was 19 years old, and they're going to win a World Series. And he's like, listen, I don't know anything about that. He said, I love to play baseball. I'm out here doing what I love. Okay, Tom Brady, all these guys.
It was like Sam Zell. Sam Zell's like, I never worked a day in my life.
He had a job for 10 minutes, he said, in a law firm. But I feel the same way as those guys do, that I really love what I do. And I hope that doesn't go away. But what I am trying to do is empower the teams and the youth and the next generation. My son, God bless him, he graduated undergraduate. I got to put a little plug in for him. He got great grades. He applied to Columbia, got into their master's in real estate. Graduated from there, and was going to stay in New York for a few years, and then we got really busy, so we came back a little bit before we wanted him to. But now he's really taking over, and
I see Drew Massirman at all the events. Of course,
I'm pushing him out there. He's like, Dad, why do I have to go to the event? I said, I'm not even going to take the time to explain it to you.
Just go.
Just go. Okay, and be there.
Call me in 25 years.
I said, I did that, and that's one of the things from Brokerage of always feeling like you could have a conversation somewhere which will lead to a deal.
Oh my God, it's wild.
All the friendships, all the friends with other developers in town. I
learned this early in my career. I've cashed north of 6-figure checks, like over $100,000 checks, because I went to that lunch meeting that I almost canceled.
Correct.
And that guy introduced me to a guy that had a deal that 6 months later is making my year. And I'm just, so now when someone's like, do you want it? Yes. I'm like, I will be there, whatever it is.
You have to play to your strengths, right?
So I was going to mention this. Somebody told me early on in my career, they're like, Omar, lean on your strengths, cover your weaknesses. And I feel like with a lot of the partners that you have that complement you so well, it reminds me of that idea.
I would modify that even. I'd say focus on your strengths and get others to take care of your weaknesses. Another great saying is delegate everything except genius. And so that I love that expression. But look, I like my partners to think I'm working. I stick my nose in there. I try and make every meeting. The young guys are always marvel. They don't think I'm listening. I'm doing text messages and I'm emailing and I'm on my laptop, and then someone asks me a question the next day at a meeting, and I'll like repeat it verbatim. I think that's part of the skill set that I'm blessed with, I guess, if you will, the memory. I can. Maybe I don't remember what I did yesterday, but I remember what deal I did, and I remember how much the financing was, what the interest rate was.
The lender,
the partner, everything.
And I feel like it's because you care, right? Like you're like, I care about the relationship, I care about the business I did, and that allows you to memorize it, allows you to keep it top of mind.
Well, I always say too, as an entrepreneur, you need passion. So it's like, for sports, you need that, Tom Brady on the sideline yelling at his team when they're ahead by 20. I mentioned him, from Boston, so that was a great run for us.
It's amazing.
But every great athlete, LeBron, the way he used to command the team and yell at his guys.
Michael Jordan, right? He always expected more. He was working out before the game. Everyone said he was a pain in the ass to be with because he's just so
tough.
demanding.
He was brutal, Kobe. And Kobe Bryant, was the same thing when you read about all his stuff. Kobe Carp too. I love Kobe. Quick plug for Kobe.
I'll probably have Kobe on in a couple weeks.
Kobe's designer.
He's also, I text him, replies instantly. I'm like, this guy's always on.
Well, fortunately for us with Kobe, the 2 pieces of land that we're buying for condos, he was involved with tangentially. So he's doing all the architecture, which is great. So Kobe's has been a dear friend for a long time. Look, Miami's a great town. It's booming.
We're so lucky to be here.
We're lucky to be here. We are working on another pretty big initiative that I can't announce it yet. Another business.
You don't want to announce it for the podcast?
I would love to announce it, but it's premature and it's a very.
No, you're good.
It's a sensitive subject around the world of Miami and companies. Let's say it may encompass the affordable housing workforce segment.
Love that.
That's all I'm going to say right
now.
Just
bring another vertical into that.
But it was a series of interesting circumstances that aligned themselves where there was some timing sort of for the next generation to be able to really get involved and run this. So I saw the opportunity once again and said, let's do it. I test the waters. I say, hey, would you guys be interested in doing this? And they're like, yeah. So what's amazing is what's always been amazing to me is with all the equity we've raised and all the deals we've done, and I don't know, it's maybe, between the storage and the small bay industrial and the multi, maybe $1 billion in equity, is when people say yes. Because you get no so many times.
24/7.
Or you get somewhere in between, no. Maybe the people don't just say no.
Yeah.
They say it nicely.
Yeah.
We'll consider it. We're not
yes,
sure.
Yes, but.
We're not in the market yet. Maybe in the near future.
Yeah.
You'll keep showing us deals, whatever it is. When you actually get a yes,
it's big.
It's kind of like,
oh, great.
Did he just say yes?
Yeah.
It's like I have to ask my team.
The rush of closing the deal, right?
Yeah, I mean, I don't know. It shouldn't be a lack of confidence that happens.
So before we wrap up, for me, it's just, and I know you've been asked this 1,000 times, I'm just really curious how again, you would answer it, is not if you would have to go back. Because if you would, I get the impression that you're the type of person that is, I am where I am, I love who I am, I love what I'm doing, so I wouldn't change anything I've done in the past, sort of mentality, right? But knowing what you know now, let's take Jay out of the question, knowing what you know now, right? You're in your mid-40s, or I'm in my mid-40s. I'm at the top of the brokeraging community. Yeah. What are some questions that you would ask me to ask myself in my mid-40s, doing a $20 million gross fees a year or in a year, to see if I go and take the Massirman route?
Look, what do you? It's the toughest question of all. What do you want to do when you grow up?
Yeah.
I'm not even sure I still know what I want to do when I grow up.
Right.
People are saying, well, Jay, you could retire. Yeah, look, it's all relative. I mean, again, there's 50 million people richer than me. There's 50 million poorer. I don't know where I am in the spectrum. I'm not really keeping score, a little bit maybe. But, look, we all make mistakes. And if you listen to the greats, you listen to Steve Jobs or Bill Gates or others that have said this, that they never learn until they made a mistake. Mm-hmm. And I've made thousands of mistakes. Mm-hmm. Michael Jordan said in one of his videos, he said, I only shot whatever percentage, 30% or whatever the percentage. He said, I only made this many shots in my career. He said, they just happened, the ones I made happened to count.
The good one. Yeah.
He said, but I took, 10,000 shots and I only made 3,000, whatever the number is. Yeah. So he said, essentially, if you look at that, that's a fail. I would look at it as going in at halftime and saying, look, I did this really well. What's your essence? Yeah. What is your gut? Right in the center of your core. Where do you want to be? Yeah. It's really. I'll answer that question. One of the coaches I think in life used to tell me, Jay, you got to do everything in 5-year increments. Okay. So he said, you say, here's my 5-year plan, like 1, 3, 5. Right. Okay. You have the 10. But the 10's a little bit, sort of longer. But what can I do today? And I've actually hired a coach. I'm working with Drew and starting working with a team. it's really like, what are we doing right now? Like, what am I doing January 2025, right? Then it's like, okay, where do I want to be at the end of 2025? Where do I want to be at 27? Where do I want to be at 30? Okay? And you know, by the grace of God, stay healthy, all those kind of things, because that's all you have, really. You know, you need a plan. And so if you want to be a principal, if you want to own shopping centers, if you want to build multifamily, if you want to be in the condo development business, I mean, you know, we always use George Perez as an example. You know, George has been 50 years, and he had Steve Ross as his partner starting out. You know, I mean, you know, one of the most brilliant, another brilliant guy in the business. I mean, but he's worked at it for all those years. A lot of guys like that in town. Armando Codina, you know, came over and did this and ground it out. And he's one of the smartest, you know, brilliant, most successful guys. I admire David Martin. Look at David's done, you know, in 10 years.
That does not stop.
You know, we just watch these guys and we're just in awe. I mean, we just clap like with the audience. You know, they're all focused. They all have a plan. You know, they want to be here. They want to be this. You know, what's the next iteration? You know, you get to be a billionaire. Now what? Where do you want to go from there?
With that.
Philanthropy, you know, different things like that. Giving back. You know, I'm chairman of Nicholas Children's Hospital. Super proud of that. I've been there 14 years. That's my third job, I call it. And I love it. And, you know, so at the end of the day, it's really where you want to be off in the future. And then you have to make a plan to get you there.
Yeah, really. I like the 5-year increment idea because, again, I'm 30 today, right? It could be, okay, let's make a plan till 35.
You're too young.
And then reassess at 35 or reassess at 40. Well,
I think that's what it is because look, these days people live longer, they live healthier. You know, back in the day, you were like done at 50.
50.
And now you're like done at 60.
Done at 70.
I'm like,
you're
right
going to be
now,
done
for
at
me,
80.
Maybe I'm done at 80.
I think
we'll
80.
See. Maybe 85.
And
listen, I look at Tibor Hollow, right? One of the greats.
Amazing.
90s. You know,
I went to their office once when he was 95, 6, 7, you know, like a couple years ago. And he was in a suit and tie reading the newspaper in his office at like 8:30 in the morning.
Listen,
90 something.
You know, we're in awe of these individuals that have done these things and that have done it for generational, you know, Alan Morris. So many people in town that have just been in this business
Bernardo
so long.
Ford, all these guys.
You know, all very great people. I'm always very friendly, you know, with most of these, obviously, and you know, enjoy sitting with them. You know, look, it's life is in this part of the business we're in. You know, unless you're Silicon Valley, you work for Apple, you head up product development. You leave the next day, you're worth $1 billion, and you form Jayco. Your valuation is $1 billion. But you took 2 steps out your door, down the hall, and you're worth $1 billion, right? Like, that's not my execution, right?
Not.
So, unfortunately for me, it's get rich slow, you know, really slow. But we're in a marathon, not a sprint, right? This isn't a 100-yard dash. This is a double marathon, 50-mile grueling over mountains, hills, rivers, falling, scraping, banging, bloodied, you know, finishing the race and passing out, okay?
And hopefully really, enjoying it along the way, you know?
You know, we're enjoying the scenery and you know, and everything like that. But you're going to get beat up and everything. And so you really, I don't know that you can get ready for that part of it because that part of it's just going to come as you go. But you have to say, hey, that's what I really want.
Right.
And then you have to set your sights and roll up your sleeves. Get down in the sprinting blocks, and then you hear the gun go off, and you're off. And look, today, I mean, you have AI. You just go to AI and say, I want to start a business plan for building self-storage nationwide. Boom. Write me a business plan, and it writes a business plan that took us 10 years to learn. And it's like.
But I heard this recently. I heard ideas are now saturated, but the execution is still scarce, which is all of it. Are you going to execute on the plan? Are you going to execute? Because you have to wake up every day and get after it. Or
look,
not,
I watch Bloomberg every day. I'm in the office. I have it in the background, and they interview CEOs all day of all these different companies internationally and different things like that. There's always someone running point on these businesses, right? And they're all the same. They're all well-educated, articulate, bright. They've paid their dues, and they deserve to be. Most of them deserve to be in that seat.
100%.
And they have earned incredible stripes, to whatever the age they are, however long it took them to do that. That I admire those. Those 100%. Are my heroes.
Yeah, for me growing up, Jamie Dimon, seeing just Jamie Dimon.
Jamie Dimon is one of my favorite people,
the best
ever. And so supposedly Trump is not going to give. I don't want to get political. Is not going to give him a position. And Jamie Dimon says, "That's okay. I haven't had a job in 25. I haven't had a boss in 25 years anyway. So no, thank you." Yeah. So it's funny.
He's one of the greats. When I hear him speak, when I see him everything, I'm like,
I'm a big fan. I'm a big fan of J.P. Morgan Wealth Management. Of him, of the people who work for him.
Yeah.
It's really amazing. But yeah, look, these are the heroes. These are my heroes today.
Yeah.
These are the people that you look at and say, look how they carry themselves, look how they operate, look how they represent themselves individually, look how they represent their companies.
Yeah.
This is what I aspire to today as a CEO.
Still.
To be, to count myself, which is giving myself a lot of credit, to be like those guys.
You are.
I mean, I want to do that. I need to be a leader for the people who work for me. I've got to be a great partner to my partners. I have to be a great partner to my lenders. It's give and take all the time. It's a very high touch, thing. But again, if you love what you do, it's not work.
Yeah.
I
love that. Jay, I can't thank you enough for the time. It's a huge honor to have you here.
Honor to be here, my friend.
Thank you. I'll call you in 5 years.
Yes. Call me anytime.
Tell you where I'm at with life.
You don't have to wait 5 years.
Thank you. Appreciate it.
All right, bud.